so much about making the tax issue small has to do with organization and planning. And those things, us entrepreneurs, we're not necessarily great at those things, but a little bit goes a long way. So if you're tuning in today, then you've taken one step in that direction. Wages, when you're an employee and just earning wages from your employer, from the company you work for, taxes become very one-dimensional, right? Based on the form you fill out when you're hired and your salary, your employer knows, or at least your employer's payroll knows how much tax should be withheld from you throughout the year, from each paycheck throughout the year, to ensure that you don't end up with any surprises when you file your tax return. In fact, as an employee, typically the surprise we get is a refund, right? We're often expecting to get money back when we file our tax return. And that's because, like I say, being an employee, earning W-2 wages is so predictable and one-dimensional that it's kind of a non-issue. There's no real planning that really needs to go into that to avoid surprises. As a business owner, it's very different. It's multifaceted. There's elements of our business that can drive taxable income up substantially and cause us to have a big surprise when we file our tax return, and usually not in the refund direction. Usually the surprise has to do with paying more money out than we were expecting. So planning as a business owner becomes that much more important. And the benefit of planning now is that you've got some time to change things before the end of the year. Before everything's kind of set in stone, you've got some wiggle room. And if you can't, minimize your taxes, at least you can plan for it. Okay, so when it comes to planning for your taxes as a business owner, the key pieces of information that are going to help you do that is in your bookkeeping records. Keeping a good set of books and keeping those books up to date is what allows you to estimate what your taxable income is now, January through November, and then project that on through the end of the year. And when you know how much taxable income you're going to have in your business, you have the ability to estimate what your tax bill is going to be. Now, how good of an estimate you can make depends on how skilled of an accountant you are, right? And we all know we're not all that real skilled accountants. But if we can use some rules of thumb to help us project what our tax liability is going to be. For example, if I own a single member LLC and I have a net profit. I look at my income statement from my bookkeeping records, which Mazuma provides to all of our clients, and that net profit on that income statement shows $10,000. Okay, I can be pretty confident that I'm going to have a $10,000 taxable income show up on my personal tax return. That's going to have income taxes and self-employment taxes, and those are going to be a roughly 25 to 30%, let's say 30%. So if I've got a $10,000 net profit and I'm a single member LLC, I should be pretty confident that I'm going to owe an additional $3,000 in taxes than I would without that business income. Okay, so if I'm used to getting a $1,000 refund back from my W-2 job, and that's going to happen again this year, but now I've got a $3,000 tax bill to pay because of my business income, I get my overpayment, my $1,000 overpayment, and my $3,000 tax nets out to a $2,000 bill that I'm actually going to have to write a check for come taxes, when I file in April. Okay, so I just gave you a good scenario that applies to you, but it kind of, like I say, it depends on what your net, it hinges on what your net income actually is. All right, so this is when that bookkeeping system, the process of tracking every single bank account transaction and reconciling it and categorizing it properly to income and expenses and assets and liabilities, doing that whole accounting process, this is when it becomes important, and we really can use that information for tax purposes. And because we then have a trend, and then we can look into the future, and being able to look into the future is very comforting and provides a lot of power, right? It brings a lot more into our control. So if I know I'm going to have to pay an extra $2,000 when I file my taxes in April, I've got 6 months, 5-6 months to adjust for that, right? To make sure that I'm ready for that payment. And heck, we can do anything with 6 months time, right? I can beg, borrow, and steal, or save all, over 6 months and make sure that I'm ready for that payment. So much different than handing all of your stuff over to a CPA or an H&R Block or something like that, and you kind of not having any bookkeeping records together, and then turning around and saying, okay, you $2,000 and it's due this Friday, which is the common scenario that us entrepreneurs find ourselves in as new business owners. So keeping your books in order will allow you to know what your net profit is, maybe through the end of October, and then allow you to project what your tax liability is going to be, what your extra taxes might be based on that net profit number. Now, our Business Plus clients at Mazuma, we love this process. We feel like this is such a huge value for our clients, being able to get on the phone and have the client walk us all the way through their income situation, all their W-2s, all of their, and we know what their business income is because we're doing the bookkeeping and keeping that up to date for them. And then we do a tax estimate. We dial that because we know all the rules, and we've got the software, and we can do, all of the sophisticated stuff. We can dial in an estimate for our Business Plus clients to usually within a very close amount of what they end up actually paying. And I can't tell you what peace of mind that brings the business owner at this time of year, and then specifically when it comes time to do taxes in April. Okay, so there's one element of what we should be doing now in order to prepare for taxes next year. A few other things I want to mention that specifically have the ability to minimize our taxes if we choose are planning in these three other areas. First, entity structure evaluation. Take a look at how much money you're earning, and then consider whether you have the best entity structure in place to continue to protect your legal liability and also to minimize your taxes. For example, the S corporation, making your LLC taxed as an S corporation is a common tax planning strategy that small business owners use that can be very beneficial. And we've done other webinars on that, and we've got some other videos on YouTube about that. So I'd encourage you to go there to find more details. But are you structured as the most tax efficient entity as you can be? LLC, S corp, C corp, sole proprietor. Those are the four main entities that you may be structured as. Consider any changes with those that you may want to make uh, before the end of the year to minimize taxes. Another one is retirement plan considerations. We've also done webinars on retirement plans for small businesses, so I'm not going to get into all the details of the differences between the different types of retirement plans, but this is one major element that you need to be looking at right now. If your business is generating income and you don't necessarily require that income to pay your personal bills, then you should really consider putting that money away into a retirement account and minimizing your taxes by doing so. You know, we've got the SEP IRA, the 401k, the simple, and then you've also got the traditional IRAs that are available whether you're a small business owner or not. Those things, you know, think through whether any of those options, whether you should exercise any of those options before the end of the year. Next thing I wanted to mention that really matters before the end of the year is whether you should consider buying a new vehicle or a piece of equipment for your business, right? Like a computer, camera, any, you know, depending on what type of equipment you use in your business. Doing that on, you know, December 30th as opposed to waiting till January 5th can make a huge difference on your taxes. So really the analysis here is if you could potentially purchase additional equipment or a vehicle and you feel like you need to anyways, then you should go ahead and do that before the end of the year. The Tax Cuts and Jobs Act that was put into law in end of 2017, in 2018, allows us to get full bonus depreciation for large asset purchases. Even vehicles that we're using in our business can be fully depreciated, no matter, even if they're put into service, like I say, December 30th. So if you're using that asset, you know, in your business, you can get a significant deduction. And like I say, buying it before the end of the year makes all the difference compared to buying it after. And one other note on that is that you don't have to pay cash for those assets, for that vehicle or for that camera or the computer or the equipment. You can finance it out and still get the full deduction as if you purchased it all up front. All right? So there's some things that you should definitely be thinking about as a small business owner. Remember, your tax situation is not simple anymore necessarily like it was back when you just had W-2 income flowing into your household. As a business owner, it changes. And if you're making money in your business, you particularly need to consider looking ahead at what your tax bill is going to be. I've seen that devastate small business owners, particularly those who find themselves kind of in paying the maximum amount of taxes. For example, you know, single member LLC or sole proprietor, we see this too often when they come to us a little bit late in the game without the ability to plan. You might make $30,000 in your business for the year, which is great, you know, but not like you're getting rich off that money, but it's good money for a small business, right? But with the self-employment tax, and if you're a single filer, don't have any kids, don't have mortgage interest deduction or these other things that can help reduce your tax bill, $30,000 taxable profit in a sole proprietorship or single member LLC can be like a $7,000 tax bill. It's just a hard pill to swallow when it comes time to pay that. When you think $7,000, I only made $30,000 and I have to pay $7,000 in taxes. It just doesn't seem right, but unfortunately it can be, and you know, you're not going to get any mercy from the IRS. So I'd encourage you to take these steps, look ahead, get your bookkeeping in order, make sure you know how much you've made, and then consider whether you have the right entity structure for your business, whether there's retirement plan options that you should be taking advantage of, and whether there's any purchases that large purchases that you should consider making between now and the end of the year to drive that tax bill down. All right, so I hope those items helped you. We are able to take questions if anybody has any, but if you don't, that's fine as well. So our role, we feel our role here at Mazuma is just to help the small business owner not feel lost, right? Not feel down. We know that this is so much new information when it comes to taxes and accounting and bookkeeping and insurance and all these things that come up all of a sudden when you're a small business owner. So we do these webinars to try and get you additional information that just be aware of these things so you can be a little bit more in tune than maybe you were before. So we're happy to answer your questions on this webinar, or we can answer your questions at our other webinars that we do. You can find our you can get questions answered or inquire more about our services at our website, mazumausa.com.